All right, so let me share my screen. Let me share my screen so that we can get started. All right. So what we are going to look at today is a simple strategy I use to trade gold. It works on, I think, almost all pairs because it uses chart pattern. That is double top, double bottom, or triple top, triple bottom. So first, criteria number one for your entry to hold is that you're looking for where the price is testing either a support zone, which is the lower level, or where price is trying to penetrate the upward level, which is the resistance zone, and it finds it unable to break it the first time, and then comes back to try it again. And if by the second time it tries to break that zone and cannot, then that is criteria number one. So we're going to look for a possible scenario. So first, I always like looking at the 1 hour time frame strictly, because the double top, double bottom that forms on the 1 hour is often very strong. And again, you might not easily find it. It's something that doesn't really occur too often, right? Okay, it's good you can hear me. So, but if you go down to the 5 minutes, 10 minutes, 5 minutes, 15 minutes, you would see it happen too often. And those ones will just be noise, and you will have more losses on that lower time frame, because those might just be little market reaction to price movements here and there. But the ones you see on the larger time frame, which is like the 4 hours, the 1 hour, holds very strongly. So we'll look back on our charts. This 1 hour. We'll look back on our chart and see where price possibly gave us a double bottom or a double top setup that meets criteria. So we're going to talk about the criteria. You don't just find a double bottom and just stick. It has to meet certain criteria. And that's what we call our CEST, conditions, entry, stops, and targets. So conditions for entry, your expectations, your stop losses, and your take profit levels. So I'm looking far back to see, okay, I think this one I took this trade. So the market has already shown us that this, now if you observe this area where you have this rectangle here, let me increase the rectangle to make it of interest. Let me change the color. Okay, so now this rectangle that is greenish is where price gave us a setup. So what do you mean by double top? Double top means that at this time, let's show you clearly. At this time, let me remove my position. So now the market came in a bullish run. Market came in a bullish run. Let me find the arrow. Market came in a bullish run and tested this resistance zone. Now, this is a known resistance area. It was a swing high. If you see this lettering, it's SH, swing high. So created a tried testing, breaking this area and rejected. If you see the bullish candle, the green candle, let me circle it so you. If you see this green candle, it created a wick up, which means the market could not penetrate the zone right after trying to test it. So market price rejected that zone and came back. Then the next candle that came out was a bearish candle. So market started selling. Now, at this point, you're not interested in what the market is doing because your entry confirmations has not been met. And then you now wait, and then the market comes again in another bullish run right? After failing to take out a support, at this point, your support is not your interest. But in the next bull run, the market comes again, right? This is the second bullish run. And then in this time, it tries to even enter the zone, but still could not. If you observe price, it's still rejected almost at the same area, right? Still rejected at this point, created another week, even though this week is not as long as this other one. Now, what happens here is that it has created a zone. It has created a zone that price could not break or close above, right? Price could not break or close above. So if you see this rectangle I've drawn here, if you have a question or you cannot hear me, you can just drop a chat. So I know we are making progress. So you see this zone here, the price entered the zone, rejected, closed at the bottom of it. The next bearish candle still did not close above this greenish high. Market went down, started coming back up again. The same thing happened. Price could not break above the previous high. Now, at this point, your interest is the first bullish candle here. This guy, this is your interest. And then this next one is also your interest. So that's why I'm doing the arrow on it. So these two guys are your interest. The first arrow that tried to break the zone and the next one that tried to break the zone. And none of it could break it. And what happened? Price opened again with a bearish candle, tried breaking the zone and still could not break the previous high and then fell down. Now, when this happens, your entry criteria 1 has been confirmed because this second top, the body does not close above the body of your first top. The wick can close anywhere it likes. Let this wick be as long and even longer than this. But as far as the body does not close above it, it means bullish activity at that place is terminated. That means sellers are now more in the market, more sellers, more selling activities. So what happens now? The market now opens, tries to break it again, but still could not, and then ends up in a sell. Now, at this first red is still not your entry position here. This is still not your entry yet. Why? Because you've not confirmed if the market truly is going to reject at this zone. Because sometimes it could create a double top and then create one red candle, and then the next one is going back to break that zone and then taking you out. So we often like to wait for an extra confirmation. That extra confirmation is that we often like to see price take out the low of the bullish candle in question. So this second top, right? This second top that formed here from this bullish movement, we want to see price take out its low before we confirm that price has truly changed direction. Like some people call it change of character, some people call it change of direction, whatever you want to call it. But the main thing is I want to see price take up its open, that is its low. Since the bullish candle, the open is always lower than the close. So we want to see price go below it and close body below. Now, if you see this red candle, it did not do that because the red candle closed, reached below it, but still came back to close above its open. So it's not candle of interest. Where would now interest us is this second candle that closes below this green guy. Now, at the close of this candle, it's where we likely take our sell for a double top. So if you had seen that I had taken that position, so this is where we would have taken our sell at the close of the candle that takes out this previous guy's low. So, and you could now set your stop loss above the previous high. So it could be this one for high riskers, those who trade very high risks, or this one for those who want to hold for long when you want to swing. So personally, I'll just say above this guy, because you know that anytime price takes off this guy, it's definitely going for this position and it will still take it up because the market has not completely finished its reversal movement. So what you now set is if you're taking 1:2, you now drag and try to set your count how many pips is this. This is 35 pips. I would like to do 30 or 30 or I like doing 30. Fine. So that's 30 pips. And then I'll be looking for 90 pips return, right? 90 pips return. So if you look at this, we didn't win this trade. We took break even on this trade. So whatever the case is, but this is the setup we usually take. So I will explain it again. First thing you're looking for is price approaching a support or a resistance zone. Now, in a bearish market, prices are approaching a resistance zone. I mean, in a bullish market, price is approaching a resistance zone. In a bearish market, price is approaching a support zone. Now, price will try to break this support, react, and then fail. And then it starts coming down again, and then tries to come up again and break it. And if it fails this second time, then what you're looking for is this rejection candle to close below the open of this bullish candle, right? So this is the first attempt, created a wick, market price rejected, came back and closed. The red candle came, could not still break it, and started selling. Price went down and then started coming back to the same zone. Now, on this same zone, price tried to break it because if you see here, it created a wick, but could not break this previous high. So your interest is that the body of this second attempt does not close above the body of the first attempt for your criteria 1 to hold. Now we have 4 confirmations for our double top, double bottom. The first condition is that your second top, the body of this candle should not close above the body of the first top. If it closed by even 1 pip or 2 pips or 3 pips, for me, it's invalidated. So if you see now, it could create a wick longer than it, doesn't really matter. But what matters is that the body here cannot and should not close above the body here, right? And if you see this setup, the price did not close above it. So our entry criteria 1 was met. Now the entry criteria 2 is that you have to wait for a bearish candle, which is a red selling candle, to close below the open of this particular candle. Now, this is this candle we are talking about, this second top, the candle that created the second top. Where it opened, there should be a candle price taking out its bottom, right? Price should take out its low. So you have to wait until price take out this low. Now, if you see this red candle, it still tried to break the top, but could not. And then price came, went below the green guy, but still came back to close higher than it. So price has not taken it out, right? It doesn't close below. Now, the one that closes below is this very one. So this one becomes our entry criteria 2 being met because price has now closed below this bullish guy. So some people call it change of character. You can call it whatever you want, but just understand the concept. So once this happens, you can enter, right? Now that is entry criteria number 2, right? The entry criteria number 3 is that you could add an extra indicator to give you a confirmation, and always add an RSI indicator. So what you do is you come to indicator and then you do RSI if you want to add RSI as indicator. Why are we adding RSI? Because when this double top and double bottom occurs, if there is a divergence on your RSI, it further confirms it, right? It further confirms it that true that there is a deviation in market pricing from what is printed on your chart. So the market could still be printing higher highs, but your RSI will start printing lower highs, right? Which means there is a deviation, which means on your chart, price is showing increasing bullish momentum, but on your RSI, you're already seeing that momentum is slowing down in the market by the creation of new highs. So if you see, let's see if this RSI gave us indication. So if you see this stop and then this stop, and then let's come to the actual market. Let's come to the actual market and then see. Now, if you see this guy, it's almost on a straight line where price was doing on the charts, almost on a straight line. But on our RSI, price had already created a deviation. If you see that there is an angle here of at least 5 degrees, whatever this angle is, but it deviates from what is happening and price. So this further confirms that, okay, true, there is a change of momentum in the market. And so once price closes below this second bullish candle, what you're looking for is a sell. You can now apply your risk accordingly. Now, we've talked about risk management, so you could know that if you want to take a trade, always use analysis to get the amount of pips you should use for your stop loss. And in this case, I explained two scenarios. Scenario one, if you're a high risker and you're just scalping like I normally do, you're setting your stop loss right above the previous stop. Now, this stop is just this red candle in consideration. Now, for those who want to swing, who want bigger moves, you should allow this. But I still truly do not see any need to set it above this guy, because if price ever breaks this guy in consideration, if price ever breaks this guy in consideration, if price ever breaks it, it will definitely almost always break this guy. And so whether you're setting your stop loss here or you're setting your stop loss above here, the chances that if this one gets taken out, this one will also get taken out. Almost always same thing. So once this happens, you now wait for your trade. So this is our own setup, a double top. Then if you had entered your trade and then you see that the price still came back to here, you now see a triple top. You can see now it still came back to test the zone, and you could still enter for a triple top if it meets the setup. So we trade double top, double bottom, or triple top, triple bottom. So now this is the criteria for double top. Now, if you're looking for a bottom, it is the same principle, but on the reverse. So let's go and look for a double bottom. So whatever law holds for the top will hold for the bottom, but it's just in a different zone. The top is in a resistance zone, while the bottom is in a support zone. So while we're looking for a next setup, if you have a question, you could just drop it in the chat box, or you unmute yourself and ask while we look for the second setup. You could see that sometimes it could take days or weeks to find a proper setup. It could take days or weeks to find a proper setup. But when it happens and you meet all the confirmations, then you can expect to either make money or lose money.
Yeah, boss, can you hear me?
Yes, I can hear you.
Hello.
Yes, I can hear you.
Yeah, I actually joined the meeting late anyway, but I still get one or two things from your explanation. But we have to watch a recap of the session because is since we are just looking at the application of those things we've learned directly, and you see you're on a live trade now, so I don't really get it.
At what point
I'm
did
just
you
I'm
at
just
what point did you join in to hear what I was saying so that I know where to
when
recap?
you were moving your mouse to get those points from the map. I was even trying to zoom. I thought I'm not in my system. I'm using my phone.
Okay, this is what you do. And I am recording it. So just if it's something you could just ask, then you ask. But if it's just to recap, then you can watch it later. I thought you had something and you needed reconfirmation. But if you download it and you'll be able to watch and get what I was saying accurately. So like what I was saying here in this price zone, this is a resistance zone, right? And price attempted to break it before. Now, why is price attempting to break it? Is because there's another resistance higher here. So it's trying to break it to come back to this other point, but failed to break it at the first attempt, right? Price reacted and started selling. Now, after a few selling activity, price saturated and then started coming up again. Now, that is another buy momentum. So you see, price reacted here first, started selling, came back up, and then reacted here. And then price failed to break the high it created here, right? Now, forget what the candle is doing. Forget this week that it was created here. What you're looking for basically is that the body of the next candle here does not close higher than the body of the bullish candle here approaching the zone. Now, forget what the bearish candle is doing. That is none of your interest. Your interest here is that the price at this bullish candle does not break the top of this other bullish candle. Now, once that happens, your criteria number one has been met. It means price is testing this zone for the second time, but fails to break the previous body close. So once that criteria is met, you can now plot your zone at the top of the body close, right? Your interest is the body close, not how long the wick is, not anything. Your interest is the close of the body. So I am zooming in now so that you see how the body of this candle is closed. Right now, you can see that this line is right at the close of this candle, but this guy did not close even near it nor above it, but it created a wick, rejected, and
Sorry. Where you are pointing to is it that 2035?
yes, 2035 zone, yes.
Okay.
Yes, if you observe that price could
Okay.
not break it here, created a rejection this week, created a bullish
Okay.
candle, started selling, started buying back to the same zone,
Okay.
started buying back to the same zone. Now came on this candle and still could not break the close of this bullish one, right? Now, once that happened, the next thing you're looking for is that price starts selling. Now, you're not going to sell immediately because your double top has met first criteria. This is only first criteria, that price on this bullish run does not break the previous top in that resistance zone. And first, this must happen in a valid resistance zone. Like criteria number one, that it must happen in a valid resistance zone. Number two is that price on the second bearish candle should not take out the close of the body of this previous one. If it does, it invalidates your setup. Now, the third criteria is that price starts selling. Now, if price starts selling, your third confirmation should happen only when price has closed below the open of this candle in consideration. Now, the candle in consideration is this very candle. 1 minute, let me draw a circle around it. Is this very candle.
I can't see the candle. The green candle.
Yes, this green candle. That's a candle in consideration. So price has to close below
What the
it.
red?
This red there has to be a red candle that close below this very green. You get that?
Okay.
Now, this
Okay.
first one did not close below it. If you look at this first one, it went below it, right? Price went below it, but could not close below it. Still came back up to close above the opening of this green candle, right? So second criteria has not been met. I mean, third criteria has not been met. This is the point where the third criteria was met because price closed below this guy. This is where price
Okay.
closed below it at this 2028.98. That's where price took this open out. And that is where your entry should have come in. Okay, this is where your entry should have now come in at 2028.98. That's where your entry should have come in. And now we talked about calculating of stop loss. Now, for stop loss, you should open your stop loss above this previous high, the most recent high. And the most recent high is the top of this bearish candle in consideration. The most recent high is the top of this bearish candle. Now, if you can see, which was 2031.68, 2031.766, right? So your stop loss should be few pips, maybe 2 or 3 pips above it. And that will give us exactly 30 pips. That will give us exactly 30 pips. And once you have your 30 pips set, if your trading 1:3, we discussed that in risk management class. If you're trading 1:3, it means when you set your stop loss at 30 pips, you should be setting your take profit at 90 pips. So you now give you a ratio of 3, which is 3:1. But this trade went almost full margin and then reversed. Let's see if it's here. It did. So the trade gave us nice 75 pips, right? So that's basically what we trade. So the trade gave us nice 75 pips. Now, when you're trading this on the double bottom, it is the same policy, but on this time around, you're considering a red candle that is approaching the zone and then a green candle closing above the previous red candle. So that's your candle of interest. The same policy, it must happen in a zone, valid support zone. Price must not take out the previous bottom. If price takes out the previous bottom, it invalidates it. And now, after price does not take out the previous bottom, price has to start buying. And it has to buy above the open of that candle, like this very one now. And at the close of this place is where you should be picking your entry for a double bottom. So that's basically what we trade. So do you have any other question?
No.
All right. So what will happen is you download once we close, we'll just share it. I'll share the link with you after uploading it to YouTube. Then you can download it and then use it for your practice, right? Then along the line, if you have any other question, you could always ask inside the WhatsApp.
All right, no problem.
All right.
Thank you.
All right. Okay.